Looking for ways to pay off your mortgage early? There are plenty of strategies available that depend on your budget, interest rate, and other circumstances. Keep watching. 1. Refinance. Refinancing your mortgage is often the most effective way to pay off your mortgage early. In a way, when you refinance your mortgage, you're paying off your existing mortgage with a new one. Many homeowners choose to refinance from a 30-year loan to a 20, 15, or 10-year fixed-rate loan. The largest reason homeowners refinance is the interest rate. Shorter loans almost always have lower interest rates than longer-term loans. Over the life of your mortgage, this can add up to hundreds of thousands of dollars. Refinancing is also a way to change other aspects of your loan, like switching between an adjustable rate mortgage versus fixed rate mortgage. At the same time, there are hurdles to overcome if you want to refinance. First, there's work involved. You're basically getting a new loan altogether, so you need to go through the application process. Second, you'll pay closing costs, similar to the costs you paid when you were buying your home. Depending on the size of your mortgage, these costs can be substantial. 2. Extra mortgage payments. Some homeowners pay off their mortgage faster by making 13 payments each year instead of 12. There are a few ways to do this. One option is to schedule your monthly payment every 4 weeks rather than every month. Over the course of a year, this adds up to a full extra payment. This isn't something you need to arrange with your bank. You can just change your own bill payment schedule. Another option is to choose a time of the year to make an additional payment. If you get a large year-end bonus, for instance, you could use it to make an extra mortgage payment. The obvious advantage to making an extra payment each year is that you pay off the mortgage loan sooner while retaining flexibility. On the flip side, 4-week payments can be a burden for people who get paid monthly or bi-monthly. If they don't line up with your pay schedule, you may need to pull a temporary payment from your savings account to keep up with your schedule. Another possible downfall of this method is that it requires discipline. It's easy to say, let's skip the extra payment just this once. 3. Bi-weekly payments. This tends to work well for people who get paid every 2 weeks. If you set up an automatic bill payment for the day of or the day after each paycheck, the money comes out of your account and you never even have to think about it. With 52 weeks each year, you're paying 26 half payments, which adds up to 13 total payments throughout the year. Second, you may save on interest charges. This depends on how your interest is calculated. It may seem like a small difference, but it adds up to big savings over the life of your loan. Another important factor is that you need to make sure you can afford the boost. Some homeowners put more money into their mortgage, but they make up for it by putting more of their ancillary purchases on a credit card. In other cases, they may fall behind on other bills and incur penalty fees that counteract the mortgage savings. At the end of the day, it's all about finding the strategy that works for you. Some homeowners even use a combination of the tactics we've mentioned. They refinance to a shorter term with a lower interest rate and make those new payments in bi-weekly installments, for instance. So, rethinking your mortgage or have questions about your mortgage payoff? Reach out to us today for a free refinance quote and consultation. And if you enjoyed this video, be sure to like, comment, and subscribe.